Record. Recording in progress. Yo, what's the deal? What's going on? Peace, everybody. I hope everybody is doing well on this good Monday evening. Y'all already know what time it is. We're going to do this market update, see what's going on in this crypto market, seeing what's going on in the stock market, we're seeing what's going on in the options market, just going over all markets. I don't give a damn what it is. We're going to take a look at it. So, without further ado, let's go ahead and get it started. Y'all already know, first and foremost, disclaimer, this is not financial advice. I cannot give you financial advice. I'm not a financial advisor. Please do not take this as financial advice. This is for education and entertainment purposes only. Please, pretty please, sugar on top. Don't take this as financial advice. Do your own research. And if you need to go talk to a financial advisor, you need to go ahead and call one up and see what they say. I guarantee you they won't try to talk to you about anything about crypto because they're going to pretend like crypto doesn't really exist. So, without further ado, let's go ahead and get started. Let's look at the total market cap first, though. You already know how we get down. Let me show y'all what's up. Let me see. I could have just typed it up, but it is what it is. So, man, we crossing so many thresholds right now. Y'all already know we have been bearish, and I've been called this out right here when we crossed over this magnificent trend line right here. Let me show y'all what that looks like. Just go from a monthly. You already know we got to do it from a top down anyway. So we were on this trend line. We broke that trend line already. We already talked about the market being bearish. We already knew that the market was going to be unfavorable for any type of upside. We were getting so many mixed signals, though, within this weekly range that we couldn't really tell which way was up or down. We are still sitting on top of the 618 Fibonacci retracement on a monthly time frame. We have 4 days and 22 hours to figure out if we are going to break the 618 and start closing below $2 trillion. Right now, we're at $2.19 trillion. Anything I feel like below is $2 trillion is going to be bearish for the market. It's going to be really bearish for the market. So this is really something to see as far as like overall trend goes, to see how many people are going to actually flake out or give up on the market. And then that's when we'll have our turnaround. The market for crypto really is only like 10 years old. We're still children when it comes to this market. So don't be mad if the market doesn't go the way that you want it to. You know what I'm saying? You need to be playing the market the way that the direction is going. If you're sitting up here telling yourself that, oh, the market is going to turn around sooner or later, and you're just going to waste your time. And unless you are dollar cost averaging, really, that's the only thing you should be doing, truth be told. You should just be dollar cost averaging. I don't care what the price is. Price could be up, price could be down. You need to be accumulating as much as possible. And then that is not me giving financial advice. That's just something that I'm doing on my own. So if I wasn't dollar cost averaging on these lower prices on these assets that we get to accumulate, then I'm really doing myself and everybody who watches my videos a disservice. So dollar cost average. Dollar cost average, whatever you can afford to put on it. I don't give a fuck if it's $5, $10, $20. Put some on it. Again, it's not financial advice. I'm just saying. You don't have to bet the farm on upside. You don't have to bet farm on upside. So, again, we broke the trend. Let's take a look at this on the weekly. Now, we've been ranging. Price hasn't gone up. Price really hasn't gone down. It's just kind of stagnating. So we are stuck in between the halfway mark on the Fibonacci retracement and the 618 mark on the Fibonacci retracement, which is somewhere around $2.08 trillion. If we start closing below $2.08 trillion, and I'm looking for more downside, and that downside is going to come in the form of $1.5 trillion. So you're going to see $500 billion leave the market. If we close below that 618, you're going to see $500 billion, which is $500 billion, leave the market. That is going to be some shit to see. I'm definitely going to be popping popcorn and buying on the way down. But again, don't try to time the market, and that's usually what happens with traders. And I'll be one of the first ones to say, because I am a trader. We try to time the market. When you're dollar cost averaging, you can't time the market. Now, you could try to trade the consolidation as far as like the daily goes, but look at this consolidation. Look at the consolidation. We've been in between these two price actions since February the 4th, February the 5th. It's almost the end of February. And it's just been nothing but up, down, up, down. That's what consolidation does. It just moves to the side. There is no clear direction. There is no clear direction. So if there is no clear direction, then there is no trade to take. Now, you could be risky, and if you're pretty good at scalping, then, go right ahead and scalp away. If you can scalp some profits out of this, then by all means. But as for me, I'm going to reserve myself and I'm going to make sure that I preserve my capital and I'm not trading this shit. I'm not. I'm just not. So if you are, what I'm saying, scalping these markets, then hey, more power to you. But I'm a swing trader. So I like daily, weekly, and monthly time frames. All right. So let's take a look at Bitcoin. In fact, I just put the chart on my left hand side, or my right hand side, excuse me. Right here. Let's go. There we go. And I'm gonna start from a monthly. Same shit. It looks exactly the same on the total market cap. These areas right here are acting as major support levels. Let me go ahead. I'm going to delete these two lines. Let's get a little more clearer picture. So on a monthly, you have resistance at $78,000. You're currently trading at $64,000. If you start closing below $57,000, the next level to the downside is 39,194. You start closing below 57,790, you are going to be looking at 39,194. As you can see over to our left, this was major support. If this starts turning into major resistance, and that lets you know the levels to the downside are 9 times out of 10 going to get picked up. Now, if you put this on a weekly, we have resistance at $68,000 on the weekly. 68,234 to be exact, just give or take a few bucks. Let me pull this up right here. Right there. I'm gonna just say right there. 68,608. 68,608. That's interesting. That's really interesting. I'll look that up later. 68,608 is your resistance. Let's put this on the daily. And then really, here's your resistance right there. Look, the resistance has been at $70,000. 70,852. And it's just resistance, 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 rally up resistance, drop down resistance, pick back up resistance. And then you started playing 68,000 as the resistance. And now you're starting to see the resistance at this level. What used to be support is now resistance right here on the daily. If I was to put this on the EMAs, this is really going to show me where I'm at. I'm under all major moving averages on the daily. I'm under all major moving averages on the weekly. And I will wager to say that we're probably on top of the 20-day. Nope, we're under the 20-day and looking to close below the 50. Woo. Yo, where's spot price? This is futures. Where's spot? Hold on. Yeesh. That is not going to fare well with altcoins, okay? I'll tell you that right now. It is not going to fare well for altcoins. So this right here, this little area, let me pick that up right there. $59,000 on the spot price. And we just talked about it on the futures price, but on spot price, you're looking at $59,000. Anything closing below $59,000, the next stop is going to be at the 100 day at 46,836 on spot price. 39,000 is the area that we were looking for on the futures price, and that's going to be somewhere around right here. Now, if I open this, you will see that this used to be support and resistance. Used to be resistance right here, support right here. So this thing could shake either way, but you on the weekly are under the 200 day, under the 200 day. This thing is going to fall. You're gonna have a very nice V-shaped recovery. I really wouldn't be surprised if we just came down to somewhere around 46,000, just negated that $39,500 area, and then just gave us a really nice V-shaped recovery back up to 74,000. That would be something to really see, possibly even back up to the 100 day at 84,000. That would be very interesting. That would be very interesting. Let's see what the MACD has to say. Where's my MACD? MACD. There we go. Oh yeah, MACD is negative. Not as negative as it was back here, but it is negative for the most part. Let's see what it is on the monthly. Oh yeah, look at that. Look at that. Very nice. Very nice displacements going on right now on the monthly. So again, you start closing below 59,000, I'll be looking for 46,000. Anything under 46,000, I'm looking for 39.5. That's on Bitcoin. Let's take a look at Ethereum. I'm gonna delete everything on Ethereum because, oh boy, let me go ahead and delete everything. That's going, man. Yeesh. Let's start from the beginning. We are on a monthly time frame. As you can see, this right here, let me open that up just a little bit more. We can get a better picture right there. What used to be support is now resistance. Support right there, resistance right here. Used to be support back here. Used to be resistance right here. Used to be support right there at $2,450. Let's go to a weekly. Eesh, eesh. It's not looking good. It's not looking good at all. Let me see. You need to hold this area right here. I would really like to see Ethereum hold 1543. But if the price of Bitcoin continues to keep dropping, Ethereum is going to be right behind it. And woo, man, man, let's see. Let's see. Let me see something. If this was me, if this was me, if this was me, I'm going to put that right there. Yeah, we're in a range. In a really decent little range. Right now, between 23.98 and 15.43, maybe. But I'm just gonna go ahead and say that's gonna be my first level right there at 1760. Anything below 1760 is gonna give way to 1543. But as it stands right now, you have been consolidating in this range right here. That's been your range. Turn my music. Ha, ha, yeah. Look at this. And then again, you're going to be under all major moving averages as well. On the daily, on the weekly, sheesh. On the monthly, you're almost right on top of your 100 day. You had a very nice previous rally that happened back in 2025 on May the 1st. So this could potentially play back out again. That would be very interesting to see because you have been bearish for 1, 2, 3, 4, 5, 6 months already. You've been bearish for 6 months since September. September the 1st, you've been bearish. It's just been straight drop, just drop. You tried to rally back a few times, you know what I'm saying, with these high wicks right here, but it's just been nothing but just drops, just drop, super drop. I would really like to see a V-shaped recovery happen right here. That would be something to see. Now, if we do not get that V-shaped recovery and we close under 100 day, oh man, let's see what happens. Let's see what happens. Let's give us a Fibonacci retracement. Mm. Well, what rhyme could beat that? Oh, we sell clothing? Not in this lifetime. Wasn't in my right mind. That's another difference that's between me and them. I smarten up, open the market up. 1 million, 2 million, 3 million, 4, 80 million more. Whew. You are now looking at one smart black boy. Excuse me. Yeah. Something got stuck in my throat. That was crazy. Ah, excuse me. Huh. You are under the 618 in 1953. On the weekly, you're not under that just yet. On the daily, yes, you are. So let's go back and then look where my line is at 2405, and it's matching up directly with the 50-day. That could be a potential relief rally. Maybe. Maybe. Let's see what the RSI has to say. I would love to see what the RSI has to say. RSI is almost back into the oversold territory. RSI is almost back into the oversold territory. So again, we could just have this linger around, still playing inside that range. Could just drop down to that 1760 area and then bounce back up. That is neither here nor there because on the weekly you are almost oversold, and then on the monthly you have more than enough room to drop. More than enough room to drop on that RSI. Let's see. I'm gonna hold it right there. Let me blow that up. Let's see. Where did it play at before? You had a bounce off of the RSI at 41.85 back in June 2022. And it's coming right back down to the RSI on that area. You have not had any monthly candlesticks, or excuse me, any monthly closures on the RSI under that area. You're right back on top of that area. If we could continue to hold that area, I will be looking for some strength out of Ethereum. But as it stands right now, it doesn't look the best. It does not. It doesn't. I'm just saying, just based off of what I see. I can only trade what I see, not what I feel. So as it looks right now, it's still bearish. And you're under the 20-day and the 50-day, still on top of the 100-day. So that's all I got to say about that. Let's take a look at Solana. I was looking at Solana the other day. I think it was at 70 something bucks. Yep, it said 78 bucks. And you're under all major moving averages on the monthly. Take a look at this. You're under the 20-day. You're under the 50-day. The 50-day is right at my resistance level. You're in a major downtrend. You are oversold on the weekly. You're under all major moving averages on the weekly. On the daily, you look interesting. On the daily, you look interesting because you have not broken $68.46. And then on the RSI, what's interesting is this level right here. I'm just saying. It could play out, it could not play out. I don't know. All I know is what I can see. Again, I don't trade what I feel, I trade what I see. And this is what I see. But as it stands right now, I don't see that thing on anywhere. It could possibly give us a relief rally back up to $112, or it could break $68 and continue into the downtrend. But as it stands right now on the weekly, you are oversold. On the monthly, you still have room to move to the downside. And you are bearish on the RSI as well. You're at 41.31. Anything under 45 is bearish. So that's what I'm looking at for Solana. Let's take a look at XRP. Yeesh. XRP is holding on for dear life on the 50-day, on the monthly time frame. Oh, you just closed under the 200-day on the weekly. You could wick fill or come back and do this wick fill over here. You got two wicks that you could fill out. This one right here at a dollar. What is that? Right there. Yeah, open that up. Right there. You could wick fill to $1.12 or possibly $1.08. Anything that is trading, yeah, yeah. On the monthly, you're holding that 50-day. On the weekly, you're under all major moving averages. So 9 times out of 10, well, I'm not gonna say 9 times out of 10. And if this 200-day keeps acting as the resistance, you could see either one of these wicks fill out, which would be down here or over here. So currently trading at $1.35. I'm looking for $1.08 to get picked up. And then let's see if it can hold a dollar. That's just an area that I'm thinking about right now. Just see if we can hold a dollar. If you can't hold a dollar on XRP, and you're going to continue to drop. And that's not going to be good for XRP. All right. Who do I want to take a look at? I want to take a look at the Nas 100, Nas 100, Nas 100, whoever you want to call it. Just the Nasdaq 100 is the technology overall stocks, and just looking at this thing, I'm looking at a consolidation. Let's go ahead and put this on the monthly. On the monthly, you were overbought. You are looking like you want to come down. Let me go ahead and remove the RSI for just a second. As I'm looking at this, all I'm seeing is the same thing that I was seeing on Bitcoin and the same thing I was seeing on Ethereum. Consolidation. Is all I'm seeing is consolidation. All I'm seeing is consolidation. And it looks exactly the same on the weekly time frame as well. Just don't even pay attention to the EMAs right now. Let's just remove those for a second and let's just go off of price action. Price action is what we can see. Okay. Don't even worry yourself about the EMAs. EMAs are just verification for what you think you see until you turn the EMAs on and they confirm what you think you saw. So, consolidation since September the 15th, the same exact thing as Bitcoin. The same exact thing as Bitcoin consolidation since September, or it's been in really Ethereum has been in a downtrend. It has not really been consolidating. It's just been in a downtrend since September. Bitcoin has been consolidating, but also still in that same downtrend. So on the Nas 100, yeah, you could make some strong points to buy at the bottom of the range and then sell at the top of the range. So you had two major buying catalysts on Nas 100, which was buy the support here, sell the resistance here, buy the support here, sell the resistance over here. So it has not came back and tapped the bottom of that range again. So right now you're in the middle of nowhere, no man's land. And I would not be a buyer or a seller on Nas 100 right now. I like to see the actual move happen out of direction. So it needs to either move up or move down outside or below my range or above my range. That's what I'm looking for. Let's go ahead and take a look at SPY. SPY is doing the exact same thing, consolidating. Let's see. SPY has been consolidating since December. So December 2025 is just consolidation, consolidation, consolidation. That's all you're really getting out of the market right now. You're not really getting any strong movements to the up and or downside. It's just been playing ping pong for the last 2 months, really for the last 6 months, to be honest with you. So and unless we get a direction, I would not be looking for major moves out of the market until we see the direction that it's going to continue in. Let's pull out some stocks. I want to talk stocks this evening as well. I've been seeing a lot of difficulties happening in the consumers markets when it comes to energy, and I want to see if we can alleviate some of that distress because I've been seeing a lot of people saying a lot of angry things when it comes to these energy companies. Specifically, one that I didn't even know was a publicly traded company was something called a company called Duke Energy, and my hometown, which is DTE, and they are both publicly traded companies. And I just want to take a look at the stock price because if this was me on the outside looking in, I would want to be a buyer on a company that controls the monopoly in the state. DTE controls the monopoly. So let's take a look at that stock. This one right here. And I'm going to turn the fib off on this one just momentarily. DTE was at $100 at the resistance. It broke the resistance right here. It has not came back to test that, which means it is now the support level at $102. Currently trading at $145, and it had a most recent rally up to $154. I had put out on my Facebook page that if I was a DTE customer, then I will want to be a owner of the actual stock instead of just being a consumer. It's only $145. They also pay a dividend. If I'm not mistaken, it's in the neighborhood of somewhere between 4.4 and 4.5%. So you want to be an owner of this stock, especially if you live in these areas where the energy companies control the monopoly. So right now, $128 is major support right now. It's been consolidating on that area since March the 3rd, 2025. It's been consolidating on that area since March the 3rd, 2025. If you don't know, they are currently building a data center in the middle of Michigan for DTE. They're building a data center for DTE in the middle of Michigan. Do your research, please. Please do your research. So again, for me, I'm not a complainer. I like to find solutions, and for me, this would be a no-brainer for me to purchase the stock because they control the monopoly. I want to benefit as much as they do. So I would be a buyer on DTE. Also, let's take a look at Duke, DUK. DUK, excuse me, controls the energy in Indiana, Ohio, and another state. I can't think off the top of my head, but let me just click on this little lightning button down here. I should have did that for DTE too. Let's go back and do DTE. I'm gonna check the lightning button on that. When you click on the lightning button on Trading View, it's gonna give you some news that you can use. Look at this. Look. So DTE was currently found to be polluting the air on an area somewhere close to Southwest Detroit, um, close to the Ambassador Bridge as well. They fined them only $100 million. If you and $100 million is a drop in the bucket. But I want to pay attention to this one right here. So DTE Stargate deal turns power into profits. So let's check that out. I never even knew that they had a Stargate deal, and Oracle and CMS have something to do with this as well. Let's go ahead and take a look. I also said that you should be taking a look at Consumer Energy Corporation, which is if I'm not mistaken, a conglomerate of the DTE energy company. So you might want to check that out. You might want to check that out. All right. So that's DTE's logo right there, if you don't know. The financial landscape of early 2026 has been defined by a singular violent theme: rotation. As investors flee the speculative froth of the technology sector, capital is finding a new home in the tangible economy. While Silicon Valley worries about software efficiency driving down margins, the physical reality remains unchanged. Artificial intelligence, AI, requires massive amounts of electricity. In this turbulent environment, DTE has emerged as a defensive shelter that is a critical infrastructure partner for the digital age. On February the 17th, 2026, the Detroit-based utility company derived a beat and raised performance that silenced skeptics. DTE reported fourth quarter earning, fourth quarter operating earnings of $1.65 per share, comfortably beating the analyst consensus of $1.52 a share. Revenue surged to 4.43 billion, beating expectations of 3.39 billion. The market responded immediately, sending shares up approximately 2.8% on a day when the tech-heavy Nasdaq struggled. For investors tired of the volatility in chip stocks, DTE offers a compelling signal. The smartest way to play AI right now might be through the powerful grid. Project Stargate, 1.4 gigawatts of guaranteed growth. The centerpiece of the bullish thesis for DTE is the confirmation, of a landmark agreement to power 100% of the Stargate Open AI data center campus in Saline Township, Michigan. This is not a standard commercial contract. It is a partnership with industry titans Oracle and OpenAI, ChatGPT. The facility requires 1.4 gigawatts of power, an immense load roughly equivalent to the output of a nuclear reactor, or enough power to approximately 1 million homes. This single customer represents a staggering 25% increase in DTE's total electrical load. For investors, the specific economics of this deal are more important than the engineering. The agreement is structured with minimum monthly charges that cover 80% of the billing demand. I'm going to read that one more time. For investors, the specific economics of this deal are more important than the engineering. The agreement is structured with minimum monthly charges that cover 80% of the billing demand. This take or pay feature is crucial. It means DTE gets paid for the capacity, whether the AI servers are running at full speed or sitting idle. It effectively functions as a royalty on the AI economy, stripped of the execution risk associated with picking the winning software model. Furthermore, the physical build out of this campus highlights the scale of the physical AI trade. Developed by Related Digital, the site the site will utilize advanced closed loop cooling systems to minimize water usage and it's projected to create over 2,500 union construction jobs. Management also noted that they are in advanced discussions for an additional 3 gigawatts of load, suggesting Stargate is just the opening act of a much larger transformation. Unlike its peer CMS Energy, which is pursuing a broader strategy of pursuing tariffs for smaller data centers, DTE is whale hunting, securing massive singular projects that move the needle immediately. Dividends, earnings, and a $36 billion in spending. DTE recent financial updates provide the visibility that uncertain markets crave. Management issued robust guidance for 2026, projecting operating earnings per share EPS of $7.59 to $7.73. They just said that DTE was at how much of a per share? Go back. Earnings per share was at $1.65. They are projecting to go to $7.73. That's a 6x. That's 600%. This represents a 6% to 8% growth rate over the previous year, a trajectory that sits at the upper echelon of the utility sector. Executives signal confidence in hitting the high end of this range, supported by tax credits from their renewable natural gas (RNG) business. To support the massive infrastructure build-out required by Stargate and the broader energy transition, DTE announced a $6.5 billion increase to its 5-year capital investment plan, bringing the total to $36.5 billion through 2030. In the utility business model, capital expenditure is the engine of profit. Because utilities are regulated monopolies, they are authorized to earn a specific return on equity, ROE, on every dollar they invest into the grid. Therefore, a $36.5 billion spending plan is effectively a roadmap for guaranteed profit growth. I don't have to read no more. I don't have to read any more. If you live in Detroit, you need, and I mean need, to be buying this stock. It's not financial advice. Please do not take this as such. I'm simply reading what they are saying. That's all I'm saying. So I am a native of Detroit. I will be purchasing more DTE stock. I already have some. I will be buying more because they have a plan, and every dollar that they put back into the infrastructure of the electrical grid means that they are guaranteed a profit on every single dollar. I'm going to share in that profit. Thank you, DTE. Appreciate that. Man, boy, they're going to love this video. They're going to love this video. And all I did was read the news. That's all I did. That's all I did was read the news. I didn't do shit. I didn't do nothing amazing. I didn't pull a rabbit out my hat or out my ass. All I did was read the news. And the news told me that they are projected to do this. That's all I saw. So let's go take a look at Duke. Let's see what Duke talking about. Shit reminds me of not money talks, trading places. When I hear Duke, I hear a Duke and Randolph Mortimer. If you haven't seen Trading Places, go watch that movie. If you haven't seen it, go watch it. Shit makes sense. Okay, winners and losers from the rollback of U.S. climate policies. Duke Energy EVP and CEO Lewis E. Lewis? Lewis? Lewis is in the movie Trading Places. Stop playing. Lewis sold 6,800 shares. Key facts: Duke Energy quarter four EPS at $1.50, 1.5 gigawatt data center agreements. Let's read that. Let's read that. Let's read that. That came out February the 10th. They said Lewis sold some. No, that's funny as shit. They said Lewis sold some. Oh man, you're gonna see the man. That's funny as fuck. Anyway, Duke's Energy quarter four adjusted EPS was $1.50, surpassing estimates. Revenue rose 7.9% to 7.94 billion. The 2026 EPS forecast is $6.55 to $6.80, fueled by rising power demand. Duke Energy has secured electric service agreements for 1.5 gigawatts of new data centers, raising its total to 4.5 gigawatts with 9 gigawatts of demand in its pipeline. Duke Energy faced rising operational costs, interest expenses, and depreciation affecting financial results. Though infrastructure investment recovery helped mitigate some of these impacts. Hmm. Not a very strong read from Duke Energy. Not a very strong read. I want to see something stronger. Lewis sold some. That's funny as shit. Lewis sold some shares totaling $868,156. That's funny. Through a 401k. Okay. Winners and losers from the road. Let's read this. Let's see. The scrapping of the foundation of the U.S. federal climate regulations has upended energy investment narratives that have prevailed so far this decade. It's like I said, it's not strong. It's not strong reads. Not strong reads. Cuts to compliance, firms engaged with the extraction and utilities to benefit from scrapping of endangerment finding. Wait a minute. Utilities with hefty coal and gas power portfolios have already been designated as early winners from the repeal of federal regulations on emissions, as compliance costs and regulatory risk will likely now decline sharply. I was reading something about emissions laws. Certainly, investors seem to look more fondly on the sector since the repeal news was announced, with the stock prices of American Electric Power, AEP, and Duke and NRG. Oh, oh, y'all gonna give me some more to look at? Hold on. I ain't gonna keep y'all too much longer. Let's go take a look at some other shit. Hold on. Let's take a look at AEP and NRG. I'm in Houston. That's exactly what I need to be looking at. Hold on. Oh, all the energy is strong. Okay. Huh. $114. Let me find out. All of this shit is trending up. Okay. Okay. I see y'all. Let's take a look at NRG. Oh, them boys ain't playing. NRG. Oh yeah, I would definitely be looking at a lot of these energy companies or companies that are publicly traded companies that provide energy to the major metropolis of a lot of these locations, such as Houston and Indiana and Detroit and St. Louis and Los Angeles and anywhere that motherfucking is publicly traded companies that actually service these areas. I would be looking into these very heavily. But I don't want to keep you guys for too much longer. I just wanted to come in and make this video as this was definitely informative for the evening. For real, the highlight that I saw for this evening was in DTE and really in a lot of these energy companies as well. But I don't have the time to actually dive through these. I'll probably make an update video later on this week. But until then, I will wrap with you guys then. Peace, family. Everybody have a good evening.